Right then, guys, this is a Saturday morning kind of update slash stream. Very briefly in terms of what I'm seeing. Right, so let's go back and start with the prop firm stuff, and then I'll come back to Bitcoin in a second. So first things first, right? If you haven't seen our latest videos in terms of the prop firm series, what we've decided to do is to help people kind of go through these challenges, but ultimately what we're also wanting to do is to take some shorter time frame stuff, right? Because myself and Paul, we are longer term traders. We've been doing this an awful long time. And in the grand scheme of things, the strategies that we like, it kind of includes golf predominantly more than screen time. So in the grand scheme of things, what we've been doing is reviewing other strategies that we're finding kind of online, or people that have come to us and said, what do you think of this? And the general idea was we would kind of review it, we would kind of see and kind of add some logic to what these strategies were looking for, how they operate, and I think just trying to get a grasp on why they work or why they don't work, and how they could work or how they could be refined. Okay, that's the first kind of step. The second step is to kind of join the FTMO slash prop firm type challenges where you could potentially trade these strategies, right, and make some profits on a daily basis, weekly basis, monthly, but consecutive profits, right, and kind of consistent profits over a longer period, right? Sustainable profits is probably more the term. The next thing, obviously, is we're looking at other areas of potentially taking these shorter time frame strategies and kind of automating them, right? So we're having a few conversations at the moment in terms of automation. We're really keen to use kind of the power of TradingView and the tools in and around TradingView, things that we can plug into TradingView. So various indicators that we're already using, but to actually create, and again, you've probably seen a couple of my videos using things like ChatGTP to create these kind of tools, right? So we're going to be playing with a few things. So first things first, when we kind of kicked this off, we were showing one particular strategy. What I want to do is just highlight what we've shown kind of in the back end of this, right? So this was Monday morning, first thing. And instead of just saying, guys, buy now, sell now, what we've really tried to do is to break down kind of what we see and why the strategy is potentially working, right? So this is a strategy based on the highs and the lows, or the range of the Asian session. As the London session opens, ultimately you are looking for a sweep on liquidity, and then from there you're looking for a change of character. The change of character kind of comes in, and then ultimately you've got an opportunity for a short time frame, and this is on a minute time frame. So you've got an opportunity to take a trade long or a trade short depending on the day, right? So what we wanted to do was to get our kind of experience in and around this, and to really break down the strategy. So we saw this trade on Monday morning, and this was looking, first of all, like a 3-to-1 type of trade. All right. Now, the next thing was, as the price kind of pings, right, looking at this particular move, the stochastics weren't lined up for the move in terms of the strategy, right? So what this means is, I was explaining to the members, although the strategy in terms of the kind of off the shelf strategy would ping you into a trade right now, it was using other aspects like the stochastic as to why I wouldn't want to enter this trade just yet, right? There was more kind of happening. So looking obviously at this particular move here, I joked with Paul about looking at a smaller time frame and so on, but in essence, it just wasn't there, as the strategy would have pinged you in, right? Now, all of a sudden, we start to see this character, right? And the character change obviously gets to a point where the larger time frame, there's been a 5-minute being the large time frame, is also oversold, right? Now, at this particular point, from a 1-minute perspective, if the 5-minute is already then oversold, we would be expecting, half decent rally on that minute time frame, right? So it's kind of like waiting for things to align and give you that additional confirmation, which ultimately leads to me lowering the risk and increasing my take profit from a 3-to-1 a little bit higher, right? So if I was to take the strategy trade, the trade still would have worked out, and it still would have been a 2-to-1 trade, right? But the general idea was how I broke it down, why I broke it down, why I was kind of showing this in real time in terms of how this trade was about to play out. Right? Now, the next thing was obviously putting in the trade, looking at the trade. I then zoomed out the bigger time frame again. Now, obviously, what I'm talking about here is this trade was likely to do its little dance and then ultimately start rallying up. Okay, so this is on a baby time frame, being a 1 minute. I'm looking at a 30-minute time frame here. So this is now a 1, a 5, and a 30 to actually understand what the price is trying to tell me. So this isn't just going off, oh, well, the price is sweep liquidity, now we go up. It was understanding why it's likely to go up, right? What is actually driving this to move the market up? The next thing then, obviously, we start rallying up. Now, with my new percentages, this was likely to be a 4.6% to trade, 1% risk, 4.6% to the upside. And then I started adding fibs into this, right? That basically allowed me, and I'll just zoom in on this. So what I done was I took the high, actually I took this to the high to the low. I should have taken this from the high to the entry. But in essence, it gave me 30, 50, 75%, right? Now, you're only talking a couple of pips between, 75 and 80%, or 75 and 70%, 45 and 55 is 2 or 3 pips kind of at best with this type of time frame move, right? So obviously got triggered into the trade. Now, the reason that I put these on here, right, was ultimately when you are doing these prop firm type challenges, it doesn't have to always be all or nothing. Right? A lot of people will say, you've got your stop loss in, leave it as it is. I've seen some people where they're up 3, 4, 5%, and then the price swings all the way around and comes back and stops them out for their 1% or 2% stop loss. So the reality is, if you were trading a live account, right, that's completely different than trading these challenges where you are trying to achieve a certain set target, whether that's 8%, 10%, or a 5% target on a usually a monthly basis, right, or the first month kind of the first challenge phase, then ultimately the verification stage in some of these two-part, well, I suppose two-part challenges, right? So the idea is if you were looking at a 4.6% gain and you're trying to make 10% in a single month, a 4.6 is nearly half of that required amount, right? So if, for example, the trade starts to look a bit iffy, or you're not quite happy, or you want to move your stop loss to break even, there's nothing stopping you doing that, right? This isn't an all or nothing type of strategy. So the general idea was using these kind of areas, the psychological levels, 30, 50, 70, or 75, right? And the general idea is if I could take 30% off the table, there's the first option. Potentially, if the price rallies on up, it's 50% off the table. That's still a 2.3% gain if you were to close your trade out there, right? So I was just explaining to the members, these are the options, these are the things that you could do instead of sticking in that trade and kind of hoping that you get exactly where you want it to be, right? Now, basically, what happened then was I started setting a couple of alerts. My alert went off, and then at this particular point, the 50% was hit. Right? Now, again, I kind of explain this, and this is part of the blueprint. This is part of the series that we want to help you guys pass these types of challenges, right? So at this particular stage, you could easily move your stop loss. You could take 50% off the table, right? These are all the kinds of things that you could do, right? So I'm, again, not doing this in particular on this particular trade. This trade was, for me, was a live trade, right? This is something that I took on a real account and actually made, a nice bit of profit on this particular move. So in terms of people trying to pass the challenge and this happening, in real time, breaking it down to explain what options you have, right? How you can kind of play this. Now, at this particular point, I'm looking at the move and I said, look, we got to kind of 75%. Now, at this stage, the price started to wiggle. The price started to play around, right? Now, personally, this was obviously a live account. I basically said, it's time for a cup of tea. It's 10 o'clock in the morning, 3.5% up at this particular point because the price rallies on up to the 75 move. And as I'm explaining, obviously, to the members, the price triggers, exits, and I'm kind of happy with, I think it closed at 3.71% Monday morning, 10:15, roughly, right? So this is an hour's worth of trade, 3.7%. and kind of locked in. Now, obviously, I've also explained that you could trade this a couple of different ways, right? There's a couple of different ways that you could look at, a couple of different ways that you could use this. If I didn't fancy a cup of tea and I wanted to sit there for another half hour, or I just wanted to set my take profit and walk away, the trade would have played out, right? The trade would have happened in my favor. We rallied on up all the way to the take profit area, right? And this would have closed out obviously at a 4.6% gain overall, right? So for me, it was obviously, time to leave, time to go. And that's the kind of thing that, we've been breaking down, right? So that's just one example of a kind of trade setup, right? There was another one we done on, I think, Tuesday or Wednesday, pretty similar. And I joked with Paul, the general idea for me was to break the 3.7%. I was aiming for 4% on the next trade. These are minute time frames. And, it kind of played out. It played out nice. You almost caught the exact high, the exact low. And the general idea is that these strategies can work. It's just understanding how they work, why they work, right? So breaking these things down, because we've always been, well, for a long time, longer time frame traders, more swing type traders, even investors in some regard, right? Realistically, these short time frame moves, they can work for these types of challenges. Whereas the swing trading, one, you need to catch the trend that you're aiming for, and you can ride these for an awful long time, right? Now, I've sat in trades for 6 months, 9 months, 12 months, even 18 months at a time, and, basically buying every dip on the way up, scaling into these entries. And, that becomes a very simple way of life. Like I said, it's more about the golf than anything else, right? So that's where I'm going to stop in terms of the the challenges and the series. Like I said, more in terms of automation and what we're looking to do next week. But for now, the next thing I want to talk about is Bitcoin, right? So obviously, I know some of you guys have only come for Bitcoin. In the grand scheme of things, right, I'm going to go back to a couple of things that I've already highlighted, right? So first things first, let's have a look. In this particular post, this goes back to the end of October. I talked about this as a couple of key areas, right? Now, obviously, this particular price from this question mark up, this was the hopium, right? This was the BlackRock ETF has been approved, and we get this kind of fake run, right? Now, at this particular point, I was explaining why these levels are likely to be tagged. So as you can see, this particular image here, this orange line going across, is the same orange line that we have here, right? And then as you scroll on down, that particular level was based on a fake run on liquidity, right? Now, at this particular point, this was obviously back in October, we started to see, the fake out run. We started to see the move, right? Now, this particular move is, not really interesting. A lot of people will say, oh, well, you said he was going to do this. And guys, if you're shorting Bitcoin, right, you're asking for trouble. There's no problem in terms of selling off your buys, right? And I did this all the way back on the first run to the 65K, right? So for me, the Bitcoin that I'm sitting on right now is the buy entry goes back to 2011, right? So there's no need to explain that I couldn't care less in terms of what this does shorter time frame, right? Obviously, I'd love Bitcoin to go to $1 million a coin, right? That would really, really, put me beyond comfort, right? However, being a realist and understanding how the markets actually work, right? I've talked about a couple of other things which I'm going to touch on in a second. So first things first, here's the fake run on liquidity, right? Now, why would we come exactly to the level and reject? Exactly to the level and reject. Exactly to the level, right? This time we fake out through the level, but we're still in the pocket of liquidity, right? We've got RSIs, we've got stochastics, we've got the Williams, all these, various oscillators. These are all saying the same thing, right? We're massively hyperextended in a move up. We've gone up with this kind of, fake hope, right? It's, Lambos by Christmas. The reality is we've done no different, right? We've run a couple of $1,000 more than I would have liked on a textbook move, right? And that's all we've done, right? So on that particular note, going back months. This is probably back to before May. We had to sign off 6 weeks, so it was April, probably end of March, right? I talked about this move playing itself out when we had the book published, right? This was this particular move, right? Now, if you look at where we are, talked about the AR, we've come down for the ST. What do you think we need to do next? Well, we need to go up, right? So this particular move I'm talking about, and this is a book being published. This was before the published date, right? And we're talking about a move that needed to basically go from the ST here up, right? You had to take out the AR, which is there. And this is why, for me, the 32, 33K level would have been the textbook move, right? This would have taken us here and not slightly higher, right? Now, the next thing is the STB, right? It doesn't have to be, this is just a textbook move based on the Wyckoff schematics, right? There's two schematics that are, again, textbook kind of criteria where everything aligns perfectly. This can be measured with a fib and this can be measured with a move down. All you're seeing, right, is this kind of liquidity algorithm grabbing where people want to buy or sell, right? So obviously when you get something like a bit of hopium, that price is, of course, going to range slightly higher or slightly lower, right? Now, these kinds of moves, they're beyond obvious, right? When you look at this particular point, talked about this, like I said, probably March, right? This was then published in the book. The next thing is, in terms of this ETF, right? This ETF, and again, this is a post, so this post here is my latest post in TradingView. Right? I talked about the ETFs. Now, there's actually 1,400 ETFs, I think, that BlackRock manage, right? And this is a number that I thought was slightly different. I've done a bit more research on this. It's 1,400 ETFs that BlackRock manage, right? Now, the ETF structures and ETF kind of term started in 1993, right? So as you can see here, 1993. There's roughly $3 trillion in BlackRock ETFs, I believe, and roughly $10 trillion covering all 1,400 ETFs globally, right? So that's 1,400 ETFs with a market cap of $10 trillion, right? So BlackRock coming in is not going to add $15 trillion to a Bitcoin ETF that isn't proven with any track record, right? That's just impossible, right? It's just not going to happen. So that's the first thing. The second thing is, when you look at these kinds of moves, right? If you deem this move right now as bullish, then the market as a whole is in trouble, right? And I'm saying that kind of, sincerely, right? The market is in trouble if you deem this to be a bullish move, right? This is the least bullish type of momentum that you could expect. Right? So we now have a halving coming up, right? That's the first thing. We've got this halving coming up, right? What we've now done, we've kind of ground up as the volume, right, drops off. Again, this isn't really a good sign, right? Now, a lot of people are going to turn around and say, oh, well, as the price goes up, the volume comes down. It's natural. Yeah, but not like this, right? And you've only got to look left to the first rally on up to the same price points, the same price levels, and you'll see a different volume profile entirely, right? You see a volume profile that looks more like this, right? Which does actually indicate a more bullish sentiment, right? So we've now ground up, which basically means we've got an ascending move. Now, I've talked about these types of ascending moves on various streams, various posts, right? The CVD, which is the cumulative volume delta, basically dropping, right, as the price is rising. So, for me, this is clearly the definition of divergence, right? And there's no, there's no wrong or right in something like this, right? If you want to be, if you want to be bullish and think this is going to 100K, then fine, right? The reality is these are the reasons, and nobody with a bullish case has come back with the same logical arguments as to, how this goes to 100K, right? I've talked about BlackRock ETFs now. For us to get to $100,000 in terms of the current, the current market cap, and for us to get to $100,000 from there, there's roughly 18 point something million coins in circulation. Let's round that to 19, just for ease of use. If you put $100,000, all you're doing is $100,000 in essence times those coins, right? Which gives you a market cap of basically, let's just round that to 20, make it easy again. To get to $100,000, you need a $2 trillion market cap in essence, right? So the way that that works is, where is the additional, right, 1 point something trillion dollars coming from between now and when you assume we hit the $100,000, right? This is where people like Plan B, for me, he clearly doesn't understand what he's looking at. When it's, oh, we're going to hit 135,000 by December. This was October 2021, right? Where was that additional inflow coming from? These are the simple questions, right? So if you've got a bullish narrative, fine, right? That's up to you. All I'm asking as a favor, right, is break down for me why and how this goes bullish with no pullback, right? That's all I'm asking for. I'm trying to break down the logic for you guys as a realist, right? I've been very, very lucky, very fortunate. One, in terms of my trading career, two, in terms of my investments, and three, what I've done even in the crypto space since 2011, right? For me, I don't care too much of what anyone wants to come in and say, right? I'm just giving you my opinion, my outlook, my view on the current market situation. These are all things that I'd love to get behind. These are all things I'd love to support in terms of, yes, we're bullish with this narrative. Just explaining why I don't see it yet, right? Now, this all comes back to this particular move, right? In terms of, we came down, we've gone up, we came down, we've come up, and we hyperextended ever so slightly, right? That's all we've done. So, putting these things into perspective, right, is all I'm talking about, all I'm showing, all I'm sharing. We've got daily overbought. We've got weekly overbought. We got monthly more or less overbought, right? We got volume depleting. Here's the grey volume, right? This is where it becomes less interesting as that price rallies on up, right? This rally on up doesn't look anywhere near bullish, right? Now, you can do simple things, and I know the market doesn't work like this, right? But just to give you an idea in terms of, what I see and why I see what I see, right? We went from a low, let's do a trend angle if I can find the trend angle. We went from a market low to a market high at 65% or 60 degrees, right? We've gone here to here at 38, right? We are still, what are we in terms of the fib retracement? We are still down to the low, just only crossing the 382 of the retracement from the high. There's nothing there that screams we're off to 100k anytime soon. We need inflow. BlackRock's ETF has been put back until at least Q1 next year, right? So the inflow isn't coming from BlackRock. And even if it does, BlackRock are not going to be bag holders for retail traders. Right? It just doesn't work like that, right? If you think that, you need looking at, right? In the grand scheme of things, we've got an increase with this ascending channel. This isn't a bull flag, right? This move here it's struggling to go up, right? There's no question about that. Now, the next thing that I'm looking at, and this comes back again to what I published in May in the book, right? This particular move is part of a much larger accumulation. Clear as day. Asset managers are net long. Perfect, right? However, leverage funds are actually net short. So the big question for me is, as we start this rally on up, what is the equation that we're looking at? What is the outcome that we're currently seeing? We're seeing retail buying at premium prices with institutional traders selling at those premium prices. So in essence, retail traders want to buy this at an inflated cost. And the big boys are saying, thank you for spending more than you need. this brings me back. One of my favorite films of all time, right, is the Thomas Crown Affair, and I love the Pierce Brosnan version. One of the opening scenes where he's about to sign a contract, and the guy is ready to light the cigar. Long story short, is Pierce Brosnan ends up signing this contract. This guy strikes a cigar and starts it up, and they say, "How do you feel? We force you to sell something." And he said, "Well, your boss is going to be angry when he finds out you've spent 10, 20, 30 million more than the asking price." The point being is this is exactly where we are today, right? This is exactly where Bitcoin is today. And I'm giving you every little bit of logic to support. This isn't me going, "Oh, I think it's down. Oh, I think it's up. Oh, I'm bearish on this." I'm bullish overall, right? And myself and Paul, we don't short Bitcoin. We sell Bitcoin that we acquired cheap, right? That's how we play. That's how we've done this for years, right? In the grand scheme of things, we've tagged this fake run on liquidity. We've ground up. We've got COT data suggesting big boy selling. Twitter is suggesting all the little players are buying, right? And there's no money inflow that we can see clear as day, right? There's nothing happening right now. This is another post, right? And I've talked about this 1,000 times. This goes back to 2020, right? At this particular period, from over here to over here, right? I was managing money, which meant I couldn't really post in terms of some of the investments that us as a company were making, right? This particular move here, right? I had a nice little run in terms of the altcoin, and I've never really invested in altcoins since, right? I've got some XRP holding, just to be transparent, and other than that, my altcoin, my shitcoin pile went to absolutely zero when I sold everything off in December 2017, right? Everything just skyrocketed, and it was, "I'm done, I'm out, thank you very much, walk away," right? And that's how I treated altcoin, right? In terms of where we are and what we've done, we rallied on up, obviously, after seeing the kind of institutional adoption, right? For me, this, after this particular spike, this was the big boys kind of buying in, right? This was the really interesting phase, going to these kind of family office events and LPs and so on, and this was fascinating, right? Then we get this reaccumulation phase, right? And again, you can click on these. If you come into the post, you can click on these, and I talk about what's actually going on, right? So this obviously is, at this stage, Bitcoin being new, right, in terms of the world of trading, and this is what I talk about, and I explain why this was the reaccumulation phase. Right? We then ultimately get to the top, and I explain why the short, is a short. Why are we going to be dropping down from there? And this is, this is part of this series of posts. I explained the move down, the move back up, the move down, the move back up, the move down to the completed area before we rally on away. Right? Now, at this particular point, everything was starting to become institutionalized. Right? We then start this move here, right? And in this particular instance, we drop down to rise back. And this particular move was seen, right, as the reaccumulation, the same as we saw over here on the left. We then had everybody call in for 100K, 135K if you're plan B, right? And the price was so obvious that we were about to drop, right? So we called a short. At this particular point, I started explaining how these trend line moves, right? So I click on this. Started explaining how these trend line moves, and this is why it's relevant for today's current price, right? What do you see here? We see this ascending move, right? This ascending move. What tends to happen during these ascending moves is the price tries to go up, right? You've got retail pushing and pushing and pushing, right? You've got the big boy saying, "Thank you, thank you, thank you." Right? And it gets to a point where all of that supply is either met with the demand from retail, or the big boys have had enough of their game and they want to start acquiring some bigger positions all over again. Right? So when the price then drops, a lot of retail will turn around and say, "Oh, well, hodl and golden hands and diamond this and Lambos here." And the truth of the matter is, less than 1% will hold their positions when they're that negative. Right? Ultimately, this allows the big boys to buy at a discounted price. This is wholesale buying from retail at a discounted price. If you've ever owned a car, You've gone out and spent, £100,000 on a new car. You've driven it for 6 months. You go back to the showroom to try to upgrade your car, and the guy basically says, "Oh, I'll give you 50 grand for it." Right now, I had one of these a long time back. I had a Ferrari, ended up selling it, went back into the showroom a couple of days after, and they put another 30,000 on top of the price that they'd given me for me to exchange mine. Right. This is the way that the world works. Right. The reality is these things happen. These things happen every day. Right. And in Bitcoin terms, it's just obvious. Right. Retail want this to go to the moon. Retail can't define how this gets to the moon. The larger players will ultimately take this to the moon, right? But not in a straight line up. Simple as. Okay. This particular stage now, we've seen this ascending pattern. It's ascending move, right? For us to drop up, down, and through. This is the kind of thing that we're looking for, right? So at this particular point, where are we on the charts? Oh, that's right. We've tagged an area of a fake out run on liquidity. Here's the fake out run on liquidity. After hyper extending on a move up with no volume, based on, right, and this is the big surprise, based on a slightly extended move from ST up. Hyper extended on some fake news, low volume, divergence on the CVD, and we're now in the very top of this, ascending, ready for the trend line break, right? So I'm just going to leave it like that, right? That's where I see things at the moment, right? If you want to ask any questions, be my guest. But if you want to fire, "Oh, I'm bullish because," then all I'm asking you for is, before you just throw it as a throwaway comment, I want supporting logic, evidence, backing up the way that I've just done as to where we are right now, right? Write a post, make the post private and share it, right? It doesn't matter what you do. But I want, if you want to come out and say, "Oh, well, it's bullish because," back it up. That's all I ask, right? So I'm just going to check, see if there's any questions. What I'll do is I'll check on both the, actually I can't do the YouTube on this one. Obviously this is going to be streamed on YouTube as well, any problems. So I'm going to leave it like that for today. Like I said, anything else, any questions, I'm going to give it a couple of seconds just to see. If not, obviously enjoy the rest of the weekend, guys. I'm off, and I'll see you next week with the update on the prop firm trading, the automation type series, and any kind of trades that we'll be taking live will obviously be shared as well. All right, so clearly no questions. Again, thanks for watching, guys. I'll see you on the next stream. Cheers all. Enjoy the weekend.